My name is Thandeka Xaba, and I'm the co-founder of Digital Africa Ventures.
Marvin Lubega, co-founder at Go1.
Ikenna Nzewi, I'm a Nigerian-American entrepreneur. I run a company called Releaf.
My name is Tesh Mbaabu. I run MarketForce. I'm the co-founder and CEO.
I'm Zachariah George. I'm the managing partner at Launch Africa Ventures.
Successfully raising 25 million Rand from our anchor investor, the SA SME Fund. And I think just the support to fund a black female-led fund was really, it stood out for us in our capital raising journey. Then I'd say my worst experience was probably pitching to larger international investors. And that was mainly because we hadn't really figured out whether they had an interest in investing in Africa in a fund of our size. So we hadn't really done our homework.
It's incumbent on us as entrepreneurs to really understand why we need the capital and reflect if we need the capital. I think you find in the tech space these days, it's almost like a race for who can raise the most at the highest valuation, but not all businesses are built to raise venture capital or even equity capital. Maybe you're better for debt or something of that nature. And so it's important to interrogate by saying, why do you need the capital, if you should raise the capital, and what quantum? And I think that's where the lesson comes in.
To raise more capital than you might anticipate at first, because a business always costs a little bit more than you think it will. And to make sure that you're anti-fragile to some of the changes in the market, because black swans can really come at any time, like a global pandemic. And so you want to be resilient through those times.
Building a network around people who will help you access the right pools of capital. The other lesson is you being investor ready really means from the start, as you organize your materials, just making sure that your story is super compelling.
One of the biggest challenges about raising capital is the ability to convince and tell a story about why capital is required and what the use of proceeds are, and how you can target a market that will grow to at least $100 million within 3 years. And that's the usual benchmark when it comes to growing a business from product to scale.
So understanding if you're raising capital, what do you need it for? And can you actually execute on the milestones or the goals that you have using the capital that you have? And are you at the right time and space in your business to raise capital?
Capital is not that important in your growth as a business fairly early on. I think often entrepreneurs will say capital is a reason for us not to get going. But often you find that there's a lot of traction one can actually achieve in the business without necessarily having a lot of capital. You may need some, but not a lot. And I think it comes down to, do you build a full-size development team, or do you go get a website off Wix and run a form on Facebook to capture your market early on?
Capital is not a marker of success. Delighting your customers is. And so raise the minimum amount of capital, to find out how to delight your customers. If you do that, capital will chase you instead of you chasing it.
Do not spend more than a quarter of your time, a fifth of your time raising capital. If way too many founders spend way too much time raising capital and not functioning or not focusing on the functional and operational aspects of their business.
Early on, we took the decision of, do you want to raise venture capital and go on this journey, or do you want to cash flow the business internally? And I think for us, it was a simple question of, ask one of our advisors, what is the size of the problem you want to solve? And it's no doubt you could have gotten there in maybe, let's say, 20 years. But the question is, can we actually capture the market soon? And I think the advice was, raise the venture capital, capture the opportunity, because you've got a good positioning in the market right now to do so.
Basically make sure that you have more capital than you absolutely need, so that if there are market fluctuations or issues, you still have time to course correct. And I think that lesson is a really important one, because as entrepreneurs, we can become very optimistic on how quickly a business will become profitable, and then its lack of need for additional investment. And so the lesson there is to expect that things will take a bit longer, budget for 1.5 times X what you thought it would take, so that you have that cushion.
one of the best advices we got was actually from a partner within Y Combinator called Team. And what Team advised as we were going into fundraising is that not all money is created equal. So you need to take money from the right kind of investors.
It wasn't one specific person. It was a group of fund managers that currently have DFIs on their cap table and gave us feedback about how frustrating the process was, and had reached out to us saying, if you can avoid having them on your cap table as much as possible, please do.
Well, I think knowing what I know now around capital, it's again being more discerning about who you take capital from, and also more importantly, knowing how you spend your capital, but also when I say who you take it from, it's the same way, companies do DD before they invest in you, like due diligence, understand who you are, your customers, your metrics, and so forth. I would implore entrepreneurs to do the same. Do DD on their investors, and be intentional about who you approach.
Optimize for speed rather than valuation, especially early on, because in more time. So we spent 9 months fundraising for a seed round, and it feels like if we really optimized for speed, we'd have done it in 2 to 3 months at a lower valuation, and moved really fast and build up the valuation for later rounds.
So it's very important as founders to pick the right investors. It's very important as fund managers to pick the right LPs or limited partners, because having someone that is microscopic and micromanaging in their way of dealing with you can often cause way too many problems and could curtail the way you deploy capital, the way you engage with your founders.
May it be full of like lots and lots of money. I think the reality is we're seeing lots of significant exits and valuations come into the content, which is really phenomenal. And I think what that will mean is that you'll find that founders and early investors are starting to get more capital. And I think the hope is that it plows back into the continent and that really creates that flywheel, where the capital market in Africa is really one that is liquid. Because the biggest, qualm for many investors in Africa is, I invest in Africa, but how do I get my money out? How do I realize that? How do I exit? And so with a very active and I guess liquid market, that really does raise the bar in that way.
Over the next decade, I wish that entrepreneurs are able to access capital much earlier on in the journey, especially like at pre-stage, idea stage. So this is pretty common like in the US, in Silicon Valley, and in Africa, entrepreneurs with really good ideas have to struggle too much, have to bootstrap a lot to get to a point where they're investable, whereas in other parts of the world, you find entrepreneurs getting access to capital just with an idea.
I want to continue to see what's going on right now. I would say even in the year of 2021, we've seen, I believe, $3 billion invested onto the continent, and I think we can go 10x in the next 10 years or 100x. And so I'm really excited to see both more international capital coming into the African continent, but I think there's also a great opportunity for local funds to be set up and to make investments, because technology is truly what catalyzes societies, right? And I think a lot of the challenges that we have in Africa, we call them the problems of other things like corruption or a lack of political will, but oftentimes the root cause of that problem is that we haven't developed technology to solve our unique issues and problems. And so I believe technology can accomplish a lot in society, and I'm really excited to see more capital flow into the continent for that purpose.